If you're interested in the Coinbase IPO that is happening tomorrow as the recording of this video, April 14th, 2021, then you are in the right place. My name is Josh Bennett with Money Masters, the channel where we help you earn more, keep more, and grow more money. In this video, again, we're going to be talking about Coinbase and the IPO and whether this valuation makes any sense and if it's worth buying into as an investment. So just to give you an overarching view on what's going on. So Coinbase is the market leader in terms of cryptocurrency exchanges. So they're market leading cryptocurrency exchange. So they have about 90 different crypto assets that they trade on their platform. The big ones are Bitcoin, Ethereum, Litecoin, those sorts of things. So it's a platform where retail users and institutions alike can go and trade cryptocurrencies, obviously. And so as they're IPOing, a lot of Wall Street and Wall Street analysts and their expected valuation is supposed to be at about $100 billion. So $100 billion compared to like a Tesla doesn't seem like a lot of money, but compared to a lot of exchanges, it's quite a large exchange. So we're going to look at whether that's justified and what some of the risks are around that investment. So diving in, we can take a look here. Let me share my screen. So one of the things, according to MarketWatch, the IPO price of $100 billion means it's going to have to meet some lofty expectations in terms of increasing and growing revenue. So what that would mean is Coinbase would have to earn about $21.3 billion in revenue by 2027, which would be about 1.5 times the New York Stock Exchange, which this is the holding company for the New York Stock Exchange, and the NASDAQ combined 2020 revenue. And it'd be 46% of the trailing 12 month for Charles Schwab. And that would basically put it at nearly double Schwab in terms of value. And so again, to kind of show the lofty expectations this puts on Coinbase, Coinbase has about $90 billion of crypto assets under management, 90 billion with a B. Charles Schwab has about $3.25 trillion of assets under management. So right now, Coinbase is really small compared to some of the big boys like a Charles Schwab, but they're about to hit an IPO market like they're significantly bigger. So some of the things that are benefiting Coinbase, and we can kind of dive into this in a minute, but one of the advantages is compared to like a Charles Schwab or New York Stock Exchange, they're open 24/7, 365. So they have more hours in a day for them to make money. They're the market leader in a fast growing industry. So that's one of the keys there is that, cryptocurrency is basically at the tip of the iceberg in terms of being kind of accepted by the mainstream. And I think that's why we're getting these lofty valuations, is because they're going to be kind of the first of breed within this fast growing towards mainstream endeavor, if you will. But so they have the kind of that first mover advantage. And so they also have the market shareholders. So they have that advantage when it comes to this. The other advantage going for them right now is that, when it comes to cryptocurrencies, Bitcoin, Ethereum, some of these cryptocurrencies, which Bitcoin and Ethereum are kind of the two biggest players when it comes to Coinbase's transactions, but both of them have gained massive popularity throughout 2020 and 2021 during the pandemic. One, you're starting to see a massive undertaking with Bitcoin to go more mainstream, becoming more mainstream. Banks are starting to accept Bitcoin. You're starting to see, big companies like MicroStrategies, Tesla using, and Square using Bitcoin as part of their books and their financials, which is just legitimizing cryptocurrencies. So as it becomes more legitimate, you're going to see more people buying into it. Also, the prices are going up for Bitcoin and Ethereum. Coinbase makes their money, majority of their money, about 90% off of transaction fees. So as the price goes up, they have a percentage of that transaction, they make more money. So there are opportunities for Coinbase to sort of exceed expectations, but whether they're going to be able to meet such lofty expectations, it's hard to say. So let's take a look at kind of directly from what they say. So where Coinbase seeing some of their opportunity is due to high fees, delays, unequal access, and barriers to innovation within the financial industry. So one area I would disagree with is the high fees. So right now, Coinbase is at about 0.46% per transaction on average, which, on a $60,000 Bitcoin means it's a couple $100 transaction fee, compared to like New York Stock Exchange is about 0.01% per transaction fee. So pretty high fees for buying and selling a Bitcoin or Ethereum. If you compare that to a Charles Schwab or Robinhood, Robinhood led an innovation within the stock markets to basically push for zero fees. So you had a massive compression of fees on the stock side of things because of Robinhood. So now you see zero transaction fees when it comes to ETF stocks on Schwab, Fidelity, TD Ameritrade, Robinhood, etc. So I don't necessarily agree with Coinbase saying that high fees are an opportunity for them, because that's the way they're making money is by charging a massive premium over the industry. The delays on equal access, I think those are big advantages for Coinbase just because they have more hours in a day to make money. So they have a big user base already. So they have about 43 million retail users, about 70,000 or 7,000 institutions. So they've already got a good foothold in the market. So now let's take a look at some of the risks. So some of the biggest risks are our operating results will significantly fluctuate due to high volatility nature of crypto. This should be no surprise, but Bitcoin, Ethereum, the prices have fluctuated pretty drastically. So as they're based on transaction fees. So as their transaction fees fluctuate, so is the revenues. So if Bitcoin or Ethereum took a hit, so is Coinbase's revenues. And the volume of transactions. So Coinbase basically saw a massive increase in the number of transactions as Bitcoin and Ethereum's prices have skyrocketed. They saw the opposite when Bitcoin tanked a couple years ago. So there's a high correlation between the cost of Bitcoin and Ethereum and the number of transactions and the volume of transactions, not to mention just the price. So that's a big risk. Same with the fact that majority of their revenue comes from just 2 of the 90 cryptocurrencies. So Bitcoin, I'm very bullish on long term, but the downside is that, especially as Bitcoin's price rises, there's going to be less and less people that can afford those transactions. And if you have a $500,000 Bitcoin at 0.43%, it's going to be hard pressed to find people that will pay thousands of dollars to trade. So you're going to see fee compression too as Bitcoin and Ethereum's price rise. And as you have those type of margins, you're going to have much more competition coming into the market. There's already a lot of competition coming into the exchange markets, but that's going to increase it even more. But so in terms of the volatility, the monthly crypto asset volatility supported on the platform increased by 73% from quarter of 2019 to the first quarter of 2020, before decreasing by 36% in the first quarter and second quarter of 2020. So 73, massive swings in terms of volatility, as I was mentioning. So others that basically their total revenue is substantially dependent on the price of crypto assets and volume of transactions conducted. If such price or volume declines, our business operations result in financial condition will be adversely affected. So kind of going back to that $21 billion revenue piece that they need to achieve to sort of justify that $100 million or so that $100 billion valuation. This is the biggest risk, in my opinion, is that you're basically, there's so much correlation between Coinbase and cryptocurrencies and the transactions and popularity of that cryptocurrencies that you're putting a lot on basically that whole bet as opposed to just on the values of that specific company. So in kind of along that vein, why would you buy Coinbase as opposed to, say, a Bitcoin? That's kind of one way to look at this when it comes to thinking through this trade. So this is something that I think is really important to point out here. So right now, their assets on the platform massively are made up by Bitcoin. So about 70% is made up by Bitcoin. Again, if Bitcoin price takes a hit, Coinbase is going to be in some trouble. And so right now, too, one of the things worth noting is this is their net revenue. So right now, they're making about $1 billion a year. So their total net revenue is about $1 $1 billion per year. So again, to justify a $100 billion valuation, they have a very long way to go. They're already the market leader on their platform. Well, not on their platform, but they're already the market leader within that crypto space. So jumping from 1 billion to 20 billion in about a 5-6 year time frame, like is expected to be able to meet that $100 billion valuation, is going to be pretty lofty to achieve. So, and even at that, I mean, to really get the appreciation, because a lot of that growth is already going to be baked into the IPO price, it's going to be one of those situations where they kind of need to meet and exceed those expectations for you to really get some growth. So long story short, I think the valuation is going to be pretty hard to justify. So when we look at Coinbase, great company, very innovative platform, but I think it ties in line, as we're kind of seeing from these risks, that basically to meet the expectations right now, it's going to be pretty much impossible just because of the risks alone. They're tying their horse too much to things that are volatile in nature, such as transaction costs. And when we've already seen fees getting compressed on the stock exchange side of things, as Bitcoin, Ethereum, and stuff become even more mainstream, you're going to have more and more fee compression on Coinbase's transaction costs, which again, since 90% of the revenues are transaction costs, there's going to be more pressure due to becoming more mainstream and customer pressure, but also just competition pressure. As there's more and more competition at lower and lower transaction fees, there's going to be more and more transparency into those fees, and you're going to start seeing compression, which is just going to be a headwind on their future revenues. When they need to meet the revenues that are all sunshine and rainbows, having any headwind against them is going to end up bringing the stock price down. So long story short, with Coinbase, it's one of those things that, on the IPO, like trading, there's probably going to be money to be made when it comes to buying on the IPO day or nearly after. But that being said, would I classify Coinbase as an investment right now? No, I would not. I think the valuation that it's marked towards is just way too lofty, way too ridiculous, and I just don't think it's gonna. I don't think it's gonna stay that way. I think it has to overcome a lot for it to meet those valuation expectations. I mean, it could do that, but would I take that bet? Probably not. I wouldn't, honestly. Between Coinbase and Bitcoin, I would say Bitcoin is probably the better bet long term, because it's already getting just as mainstream and has a lot more factors going for it than I think Coinbase does. But again, this is all for educational purposes, so I hope you found this valuable. Obviously do your own due diligence as you're thinking through buying and selling these type of companies. But this, I just wanted to point out some of the risks and kind of how to think about these IPO prices and whether they make sense. We didn't dive into the financials too much, but at least wanted to show you, like, hey, there are a lot of risks when you kind of make these decisions. It's not purely just based on numbers, because there's a lot of expectations built into stock prices. And the key is, if you can't meet those expectations, that's where like the behavioral finance things can take over, and you can have really bad return on investment. But yeah, hopefully you found this video valuable, and definitely check with a financial advisor and kind of do your due diligence as before you make any investments. But until next time, cheers.